Today, one final mega deal ahead of the Christmas break with CSL bidding more than $16 billion for a Swiss Pharmaceutical group. That's our main story. Also this morning, a surge of COVID cases in New South Wales, but the state is still set to lift restrictions today. Businesses report stronger trading conditions, and Woolworths share price tumbles as COVID costs hit hard. It's Wednesday, the 15th of December, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Then stay listening for Sean's chat to McGrath-Nicol about what really happens when a business is hit by ransomware and the surprising number of Aussie companies that actually pay up. But first, Sean, as I mentioned, we thought all the big deals were pretty much done for the year, but we were definitely wrong. CSL has bid $16.4 billion for a Swiss pharmaceutical company in a deal which will expand its operations significantly.
Yes, Michael, the Blood Plasma Group made the bid for Swiss group Viva Pharma, rounding out an incredible year for mergers and acquisitions activity in Australia. CSL will undertake a $6.3 billion capital raise and a $750 million share purchase plan to help fund the offer. CSL's shares are suspended until tomorrow, though they could well come back online today. Chief Executive Paul Perreault is quoted as saying the deal will be earnings accretive, great for shareholders, and will give CSL the chance to leverage its scientific expertise. Now, the deal, assuming it passes all those hurdles along the way, will transform CSL away from blood products only towards being a global pharmaceutical company, including kidney, or nephrology is the official term for that, so kidney services and iron deficiency therapy. Australia's biggest health company spends enormous amounts of money already on research and development, and that should help build out the nephrology business from Viva. It will also make CSL a much more diversified healthcare company, and that should be good for shareholders. It closes out quite an incredible year of deal making. The biggest of them all, of course, was Square's $39 billion bid for Afterpay. Next in line was a $30 billion bid for Sydney Airport from a consortium of mostly superannuation funds. Woodside merged with BHP's petroleum assets in a $19 billion deal, which was also around the size of the Santos Oil Search merger. There's also the Brookfield bid for AusNet Services, Blackstone's efforts to buy Crown Resorts, and the listing of Endeavour Group, which was Woolworths' liquor and gaming business. Quite an incredible year, and one of the biggest deals of the year to finish it all off.
Yeah, pretty extraordinary, isn't it? So how did markets perform yesterday then, Sean?
Well, not bad at all. The S&P ASX 200 closed flat at 7,379 points, which was pretty good given the poor lead-in from Wall Street. Mind you, it's a pretty mixed bag. WiseTech Global, Goodman Group, Telstra and Fortescue all did well. Scentre Group and the retailers not so much.
And what's happened overseas overnight?
Wall Street is trading lower this morning after a report showed US wholesale prices rose at a record pace last month, ratcheting up pressure on the Federal Reserve to tighten monetary policy. The Fed's Open Market Committee meets tonight, and investors are awaiting any major pronouncements. European markets were also weaker, with the Stoxx Europe 600 closing almost 1% lower, and the Aussie dollar is buying a little over 71 US cents.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning, and a pretty worrying one out of New South Wales yesterday, a big surge in COVID cases with 804 new locally acquired infections.
Yes, and the spike came just 24 hours before restrictions are wound back in that state, with mask wearing and QR codes no longer mandatory outside public transport from today. Also, unvaccinated people will be allowed the same freedoms as vaccinated residents of New South Wales. Now, the state's Health Minister Brad Hazzard said there were no plans for snap lockdowns, but he did call on the Australian Technical Advisory Group on immunisation to advise people to receive a booster shot as early as 3 months after their second dose. Health authorities expect the number of cases in New South Wales to continue to spike. Basically, Christmas parties. That's the problem at the moment. After the release of the figures, Prime Minister Scott Morrison said Omicron wouldn't take the country back to lockdowns and closed borders. New South Wales has reached a 93% vaccination rate for over 16-year-olds, but it's interesting. People in their 20s make up the majority of active cases in New South Wales now, followed by people in their 30s. At least 85 cases in that state are of the Omicron variant. Omicron is likely to become the dominant variant across Australia and around the world. The bad news is it spreads really easily. The good news is that so far it's a much milder version of the coronavirus than Delta is. Just rounding out the other states, Victoria recorded 1,189 COVID cases yesterday, and at least 6 of those were the Omicron variant. There were 4 cases recorded in the ACT, 12 in South Australia, and 1 in the Northern Territory. There were no new cases recorded in Queensland, which is something of a welcome surprise.
Yeah, it certainly is. Now, Sean, the National Australia Bank Business Confidence Survey showed a strong recovery is underway.
It did. The bank's latest survey suggests things are on the improve, despite a slight drop in corporate confidence during November. Business conditions and sentiment are all important for the economic recovery, and particularly the employment market. Companies said they intend to hire more workers and have upgraded their investment plans. Business conditions are now well above the long-term average, though they do remain below pre-Delta levels. It's not all good news. There are still pockets of weakness. The personal services and recreation sectors are still struggling, while Victoria is relatively weak. Conditions in Queensland, Western Australia and New South Wales, however, are really, really strong. The survey says there are also wage pressures in the economy. Now, while conditions are stronger, sentiment is down slightly, as I mentioned, albeit still at high levels. Official labour force data for November are due out tomorrow.
Now, Sean, this next one is a pretty good example of some of the real costs relating to COVID. Woolworths has warned that profit growth is slowing as a result of a big jump in COVID-related costs.
Yes, its share price yesterday fell by almost 9% in early trading after making the announcement before finishing down 7.7%. Chief Executive Brad Banducci said profit in the Australian Foods division was likely to be lower in the current 6 months compared to a year earlier. The reason? Around $65 million in higher costs due to supply chain disruptions and higher fuel costs. Total costs have jumped by around $150 million, he said. Mr. Banducci gave the example of the supermarket giant's distribution centres. Every single staff member that turns up has to have a rapid antigen test and then has to wait 15 to 20 minutes for the results. That is a big impost and a big cost on the company. In part, it's meant the company has had to boost staffing levels. More than 18,000 staff have also had to isolate during the pandemic, adding more costs. And Big W has been particularly hard hit. So the question for most of us, of course, is, does this mean prices will rise? Well, Mr. Banducci said Woolworths won't push through higher prices to try and claw back increased costs, but there will be price rises if the underlying cost of a good has jumped. So what's that mean? There will be price rises on the supermarket shelves in coming months.
Okay. Now, you mentioned earlier, Sean, the big CSL deal. There was a bit more deal making as well yesterday in other parts of the market.
Yes, it seems that with so much money swishing around the place, investors are determined to spend it at the moment. Private equity group BGH Capital yesterday made a bid for fertility service provider Virtus Health, offering a 36% premium to the group's latest share price. Quite incredible, really. That made the deal worth about $600 million. Now, BGH already owns 9.99% of Virtus, and media reports say it has another 10% on the way, so it's very aggressive in that one. Also, Afterpay shareholders overwhelmingly voted to approve the Buy Now, Pay Later Group's acquisition by Square, which is now called Block. The deal now only requires approval from the Spanish Central Bank, and that's expected mid-January. The two founders of Afterpay, Anthony Eisen and Nick Molnar, will now join Block, which is run by Twitter founder Jack Dorsey. It's a moment worth marking. It means the end is nigh for one of the most successful Australian companies ever. It listed just 4.5 years ago at less than $3 a share. It hit a record of more than $160 a share in February this year and is being sold for around $94 a share. If you're on it, you've been on a great ride. Well done.
Yeah, absolutely. Now, Sean, you'll have to keep this one pretty simple for me. The federal government is looking at boosting the ability of service providers in the digital economy to help customers switch accounts, make payments, and do a whole stack of other things.
Yes, it all does get a bit technical, but Canberra will expand what they call the consumer data right to allow accredited recipients of data to not only read the data, but act on it with customers' consent. What's it mean? Let me try and explain that. Soon, we'll see the creation of a bunch of digital concierges, and they'll be able to switch banking or energy accounts for you. One of the main reasons people don't switch providers is it's just too much work. But potentially, you can go to a digital concierge, give them the authority to find the best mobile phone deal for you or your family, or the best energy supply arrangements, the best home loan perhaps. Ask them to then negotiate with the telco or the energy supplier or the bank, and then change everything for you. Obviously, there will be a cost for that, but it just takes all that bureaucracy and red tape out of your hands. This whole idea of greater competition has been a great promise of recent years. It started with opening up competition in banking and making it easier for customers to switch providers. It hasn't quite taken off yet, but this new legislation announced yesterday is a step in the right direction.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that tomorrow's federal budget update is expected to reveal a blowout of about $26 billion over the next 4 years due to the spiralling costs of the National Disability Insurance Scheme. The Australian is reporting that the Prime Minister will help senior Australians fund their retirement by unlocking the value in their homes under a revamped reverse mortgage scheme to be unveiled in the budget update. And finally, Michael, the Financial Times is reporting that 2 doses the BioNTech Pfizer vaccine provides 70% protection against being admitted to hospital with the Omicron coronavirus variant. It's lower than the 93% protection provided against the Delta variant.
Running through a few of the other stories around today, the federal government yesterday confirmed that drug giant Moderna would build a new mRNA facility in Melbourne, which is due to open in 2024. Both federal and state money will go towards the facility, though the Prime Minister yesterday wasn't saying just how much. Victoria's acting Premier James Merlino said the deal would put Melbourne on par with Boston and with London in terms of medical research. Pretty exciting stuff.
It is. Over-exuberance, though, I suspect, from Mr. Merlino.
Maybe a touch.
Qantas will be the first Australian carrier to fly commercial trips using sustainable fuel alternatives after agreeing to buy 10 million litres of biofuels from BP next year. Qantas said it would cut the sustainable fuel with regular jet fuel to reduce carbon emissions on its flights from London, and it should be reducing those emissions by about 10%. And Michael, just staying in the airline industry, Virgin Australia yesterday said it will form a partnership with US carrier United Airlines from April next year, returning back to the US market for the first time since the beginning of last year.
One of the country's leading antitrust litigators, Gina Cass-Gottlieb, will in March next year become the first woman to head up the competition regulator. Ms. Cass-Gottlieb has been nominated as chair of the Australian Competition and Consumer Commission to take over from Rod Sims, who has resigned after 11 years in the job. The incoming chair is currently a partner of Gilbert and Tobin, and her appointment first needs to be ratified by both state and territory governments.
Kogan.com, the online retailer, has sold a domain name it owned, bitbuy.com, to the parent of a Canadian-based Bitcoin and cryptocurrency trading platform for $1.5 million. It's also struck a deal to supply advertising and marketing support to the group when it sets up in Australia. BitBuy is one of Canada's largest cryptocurrency trading platforms by volume, and the deal paves the way for it to enter the Australian market.
Now, Sean, we have talked a lot this year about the Australian drug company Mesoblast, and you've pointed out on a number of occasions just how volatile the company's share price is, and yesterday was no exception. Mesoblast's share price tumbled 17% yesterday after the drug giant Novartis terminated its agreement with the Australian company. A deal was struck last year dependent on the outcomes of a clinical trial into treatment of a COVID-related illness.
Interesting, that one, because Mesoblast didn't think the trial results were too bad, but obviously Novartis didn't agree.
Yeah, seems like it. Now, what's the key overseas news this morning?
Well, President Joe Biden's popularity is waning, at least according to the polls, ahead of next year's midterm elections. He's been marked down on his handling of crime, the economy, and the pandemic. Even his main domestic policy, reforming US infrastructure, has lost backing in recent months. Giant Swiss bank UBS has been ordered to pay around $2 billion in fines for helping wealthy clients in France evade taxes. UBS had appealed a guilty verdict against it and lost, though the fine imposed was reduced. And finally, the Afghan Foreign Minister Amir Khan Muttaqi has given an interview to Associated Press, a rare event for anyone in the Taliban leadership. And he said his government was committed in principle to education and jobs for girls and women. He said the Taliban government wanted good relations with all countries, including the United States, and urged Washington to release $10 billion that was frozen when the Taliban took power on 15 August. Let's hope he's speaking the truth.
All right. Up next, Sean, is the Daily Interview. And today you're speaking to McGrath-Nicol Advisory about ransomware. It's a really interesting chat, this one.
It is. What amazed me was how prevalent it was. About a third of Australian companies have been hit. And by far, the big majority actually pay the ransom. Incredible. Well worth a listen.
Yeah, and what really makes a difference in this one is that the guests today have been on the ground working with a lot of companies to try and help resolve these ransomware situations. And so they know how much money is being paid as well. It's a fascinating insight into something that you really don't hear that much about. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 15th of December, 2021. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.